Hey everybody, welcome to Flight School Connector. We're coming direct to YouTube for you this month. We're trying something new. This month's episode is Conglomeration Configuration, Forming a Business Entity. So we're hoping this will be an exciting one and hopefully really informative for you. My name is Chris Moser, Senior Director of Flight Training Education here at AOPA. I am joined by James Hurst. James, tell us just briefly about yourself.
Sure. I'm the Senior Director of Accounting and Compliance with AOPA. I've been here for over 26 years and I enjoy working here.
Cool. And you enjoy things like taxes and accounting, oddly enough.
Sad to say, yes, I do.
And that's why we have you on.
Thank you.
And of course, behind the scenes is Steven Schroeder back there, and he is doing his thing. So all the magic you are about to see, we can either give credit to Steven or we can blame him for it. So let's get to it. So this month, we want to, of course, always thank Sporties, our sponsor for the program. We appreciate having them, and they wanted to highlight their flight training courses. So if you're looking for something for your curriculum, like private commercial instrument courses or getting discounts for that sort of stuff, they've got a great program. So go check it out at sporties.com. And if you've got questions, check out that email, mark.w@sporties.com. So let's talk a little bit about what we want to cover today. The big things today, we're going to talk about business entity structures and why you might want to consider those. We're going to talk about the similarities and differences between an LLC or a limited liability corporation and a corporation. A little bit how to form them, because James is going to share that with us, and then some key takeaways, of course, at the end. Now, that said, I taught econ, but I am not an expert on this subject. James, you're more of an expert, but what's the one thing we want to make sure everybody knows? That this is not to be taken as
tax advice.
Yeah, why not?
Well, because we're not that profession that we go out and we help people form companies. We work for AOPA in the accounting department and we support AOPA's mission. So what we're trying to do today is trying to give some tips to which is the best entity for your specific business.
So really the key thing I think we want to take away from this, and I hope our viewers will, is that just know the right questions to ask and really default to your own CPA, like tax attorney, whatever it might be.
That's correct, or both, because you might need both of them.
Exactly. And so that's probably going to be the biggest thing. So hopefully we're going to let you go into that conversation a little more informed with some good questions to ask, but try to find out from them what the best thing is for your situation.
Right.
So let's get started. The first part is forming your flight school, and that is into an actual legal entity. So we talk about these ideas of legal entities. We've got some of the common forms, and if you've ever taken an econ class or a business class, you've probably seen some of these. So James, tell us about some of the basics here of a limited liability corporation and corporations and so on.
Sure, and again, as the slide says, it's for profit. So more than likely you're going to pay taxes on this. Hopefully you are, because that means you're making money. So you have your limited liability, which we call an LLC. In my opinion, that's favored for this type of business. It's easy to set up. It gives you that liability protection. Corporations, it's more for setting up if future you want to get investors in this corporation, it grows. The good thing is you can start off with a limited liability company and kind of grow into a corporation. But they both give you that liability protection.
So you're not locked into any of these. It's not like, oh, I've chosen this and that's all I can do forever.
No.
You can transition as needed based on the needs of your company.
That's right. As you grow, you can transition.
Cool. And now I know one of the things, I told you I taught econ, and so one of the things that jumped in my mind was I remember teaching my students about sole proprietorship and partnerships. But in this case, you kind of were saying this may not be the best option for a flight school. Why was that?
Well, I mean, you don't get that liability protection as you would if you created an organization like an LLC or a corporation. So what you're trying to do is you're trying to set up that barrier to protect your personal assets if you have a business.
So in other words, if something were to happen and you didn't have a corporation of some sort, whether it's an LLC or a corp, then a creditor could come after you and
your personal assets, that's
Yeah,
right,
like-
you and your family.
like your house and all that kind of stuff.
Exactly.
Yeah. So that sounds like a smart idea to me.
I think so.
All right. So let's talk a little bit about some of the similarities between corporations and LLCs, because that's what we're going to focus on. Just to review too, I know we had talked beforehand about the idea of a sole proprietorship or a partnership. Really, that's just the difference there is that's just you, like, I'm doing stuff, and you're running a business versus having a separate entity. Does that sound
That's correct.
accurate?
It's kind of like Chris Moser. I'm going to go out and I'm going to create a business, and it's your name there. You don't have Chris Moser LLC. So again, it goes back to it's going to be on your personal tax return. It's going to show up there.
Okay, cool.
Which, as well as an LLC, but again, you don't have that protection.
Big thing. So that's the big things. We are setting up something separate from this, and I know that gets into what we wanted to talk about in this slide. So tell us, James, the similarities between corporations and LLCs. What are the big things?
Yeah, sure. Again, for both, I'm always going to promote the LLC because I think it's the best fit. But this includes both corporation, LLC. You got your liability protection. You're going to protect your personal assets. It's a separate entity which you create again as a way to separate your personal life from your business life. With that, that separate entity, you're going to create additional returns that you'll have to file for that business. That's not a bad thing.
Right.
And that's going to be on the federal and state level. You have your tax benefits, which some are not available to sole proprietors and partnerships. We can talk about those down the road.
And I know we're going to have an episode we talked about in the future just talking about taxes, so we won't get into a lot of detail here. But you're going to dazzle us in a future episode with all the types of taxes they might want to think about.
For sure.
Yes.
Because I like taxes. Annual filings. Yeah, I know. I don't know if it's not a benefit, but it's one of those things that you're required to file. Your annual filings could be an additional tax return. It could be personal property returns. It could be sales tax returns. There's a variety of different returns depending on what state you're in, and of course, federal. You'll have those.
So the big thing here is we definitely have benefits that come with this, the idea of being a separate entity, protecting your assets. But with that, of course, there's always going to be something that there's a trade-off, right? And this idea that you're going to have to do some extra paperwork. There's going to be some extra stuff you have to do to get those protections.
That's true. And, and that's where you want to have a business partner. You want to involve a CPA to help you with this.
Cool. And I know we're going to keep coming back to that recommendation, too, of get that CPA or tax attorney or whatever it is that's going to help you make all this happen.
That's right.
If you're not the type of person that's already knows about this, and we suspect potentially not, especially if you're watching the episode, you're probably thinking, like, I want to learn more about this.
That's right. I mean, I'm not saying there's certain returns you can't do, but again, if this is not what you're used to doing, it's best to reach out to someone who knows what they're doing.
Cool. All right, well, let's take a look now at some of the differences between corporations and LLCs. And the first topic are tax differences. So James, tell us, what's the differences between a corporation and an LLC when it comes to these terms?
Sure. Again, I'm not going to get too much into corporation because it's just very complicated. I will say that, there is a statement that when you have a corporation, there's double taxation where, you're getting compensation, you're getting taxed there, and then if you're getting dividends from the company, and then again, you're taxed on that. But I will focus on the LLC side of the business. With LLCs, some of the things you have to consider is you do have 4 choices. Again, we're going to talk about that in a future episode, but there's 4 choices out there. And by default, you're a sole proprietorship or a partnership. And those things are going to run through your personal returns as a business return. The one thing to keep in mind, and sometimes people see this as like a con of an LLC, is that you will be paying self-employment tax on that return. So just be aware of that. It's just something to note. It's a tip.
Right. So big things to tip. One, to keep you out of legal trouble, of course.
That's right. And I don't want you to be surprised when you're filing your return. You're like, what's this additional tax?
Yeah.
Right.
Yeah, nobody wants that. And
Nobody
wants to be
that.
surprised by that for sure.
Exactly.
All right. So good to know. So figure out what again, talking to your CPA, talking to your tax attorney or whatever to find out which is probably the best for you after you form this LLC.
That's right. And just keep in mind, you could start off as an LLC and you can kind of grow into that corporation. And again, it's all based on where you want to be in the future with this organization that you're creating.
All right, cool. Now, there was obviously a big topic here is we talked about this idea of asset protection, of being a separate entity, but there are some differences between corporations and LLCs when it comes to this. So can you tell us a little bit more about that?
Sure. It's probably more about an LLC you have a little bit more protection than with the corporation because, again, creditors can seize your stock and company assets. So you do have fewer exceptions there. Again, I would, and I don't want to be short in this area, but when you're talking about what is the best setup, you want to talk to your attorney about what asset protection you need for your personal life and your business.
Okay. And so in this case, and we see that the LLC can potentially might help you. That's where you want to find out more about it. It might help you better than maybe even a corporation. Maybe.
I think so for what we're talking about here, but yes, you want to confirm that with your attorney.
All right.
That's right.
Good to know. Now, I love these pictures that we chose here.
That's right.
So the formality differences, we know that we've got corporations and LLCs. Again, we've got one that is a little more formal than the other, and maybe you can talk to us a little bit about some of the formalities and why that might be a consideration.
Yeah, again, with corporations, there's a lot more paperwork, to be honest.
Okay.
You have your bylaws, your forming, you have your annual meetings, you have board of directors meetings. There's a little bit more that goes into it. Whereas an LLC, once you create it, there's not much you really have to do on an ongoing basis when it comes to meetings and paperwork. So I would say if you're starting a business, the cost-effective way is going the LLC route. It's cheaper to form. It's easier to maintain on an annual basis.
So the big thing here, it sounds like, is that it's almost easing your way into this idea potentially if you're getting started, especially if the flight school might be small. You have a little less to deal with, and as you grow, you might say, well, I want these benefits of a corporation, but knowing I'm going to have more formality to deal with, like as you said, having this whole thing with a board of directors and shareholders and all that sort of stuff. So just keep that in mind.
Yeah, for sure. And you're starting a new business, so you're focused on the business. You're not focused on the business side. You're focused on growing your business, and you're not necessarily focused on the paperwork side of that. So yeah, I think an LLC is the best route to start off and to grow into a corporation.
Potentially a little bit easier.
Yeah, I agree. Yeah.
All right, cool.
Yeah, for sure.
All right, and then so let's get down to what our folks out there can do. Let's say that they've spoken to their CPA, they've talked to their tax attorney. How can they go about getting started with this? And that's the first one we chose here was if they want to form an LLC. Can you walk us through some of the basic steps? And again, some of these may be different, I think, based on the state that you're in, but can you walk us through the basic steps of things they should be looking to do to make this happen?
Sure. And again, the basic step is, which people don't think about, is choose your business name first, because what could happen is that you get to the IRS, you're putting in your business name, and it might be okay at the IRS level, but the state level, that name might already be taken. So you just want to be careful that you're checking both federal and state before you go out and you try to create this organization.
So before even going and filling out any paperwork, and you told me a little bit beforehand too, how can they research this to make sure that business name isn't already taken?
Sure, you can go out to, let's just say the IRS. You can go out to IRS, search business, and it will give you the different business names. So you can search from there. At the state level, you again can go out to, say, Maryland business taxes, search businesses, and from there you can put in a business name, and it will let you know if that name's taken already.
And you just use Maryland as an example because that happens to be where we are. But
that's right.
Most states should have something like this where they can search for that.
That's true. That's true.
All right. So make sure you go out and search it. Make sure your name is, I guess it has to be separate enough that they'll allow you to have it when you go to register.
That's right, because if the name's already taken, of course you can't use it.
Okay.
And you definitely don't want to go out and get business cards, create websites before you know what your business name's going to be.
Or otherwise you might be adding like a ABC Flight School Junior.
Junior, that's right. That's right.
Cool. So then, how about after that? So then they've got their name, they've done the research. What's the next step?
Sure. Once you have your name, you go to the IRS, you request your tax ID number, which you can get within a day. It's very quick. Once you get that, now you can go to the state level and you can request your state ID information. And typically you need your tax ID for that, along with your business name.
And both of these IDs are basically tax numbers, correct?
That's right.
Okay.
Right. It's tax ID, so your federal is of course, when you're filing your federal return, that's the tax ID you're going to use. And then your Maryland tax ID number is typically filing personal property returns and things of that nature.
And if they're in another state, which they very well may be, they're just looking for something akin to that, right? So it's something like, it could be Pennsylvania business tax ID, or they'd search for something along those lines.
That's correct.
Okay.
That's right.
All right, cool. And then after that, they've got that set up, they've got their tax IDs. What's the next thing they should do?
I would say go to your bank because you want to keep this separate. Just like we're trying to keep the business separate from your personal life, you want to keep your bank account the same way. And when you go to a bank, one of the things they're going to ask you for is show me a printout of your tax ID number.
Okay.
With the IRS, not necessarily the state.
With this account that they're opening or seeking to open, would that be different than just a normal, like a checking or savings account?
Yeah, it's typically a business account, and they understand there's going to be different types of activity on that.
Okay, so obviously let the banker know this is what I want to do. So
That's right.
yeah, cool. And then finally, the last step.
You need an email. So sometimes people do Gmail, so we'll call it a Gmail.
Yeah.
You're going to create this account because what you'll need is you want to use this account when you're opening up and you're getting correspondence from the federal and state level, because this is where they're going to send you notices if you're late, if things have changed, if they have questions. Typically, as you're aware, the IRS doesn't send you call you up.
Right.
They're going to send you information, hard copy. Possibly they're going to communicate through emails. So you want that set up so you can use for your business.
And I noticed you mentioned the email account. Do they need a phone number then too? A business phone number? Was that something that?
Yes, and I know typically people use their cell number, but I would recommend getting a separate number.
Okay, so potentially a separate number, whether that would be with something like like you can sometimes get ones that would work on your same cell phone, like a Google.
Sure.
Would that be okay too? Just as long as it's a separate number.
Yeah, I think it's a separate number. That would be good.
Okay.
Yeah.
Awesome.
Yeah.
All right, so then the next one I know we're going to take a look at is very similar, setting up a corporation with just, I think it was one main difference, if I'm not mistaken. Can you help us understand the difference between an LLC and a corporation and setting?
Yeah, I would say the first thing is talk to your CPA and go talk to your attorney. Just because this one's a little bit more complicated, and you have to draw up your articles of incorporation, and there's just a little bit more paperwork with the corporation.
Okay, so right there, that one in bold, articles of incorporation, and right away it's like CPA legal help, because this is not something you're likely to do on your own.
No, and you want to make sure it's right the first time.
Okay,
That's right.
cool. And then the rest, all the same, IRS and state tax IDs.
Yep, you're going to go through and you're going to do the same thing. You're going to choose your business name. You're going to get your tax ID number for federal and state. Open up your bank account, business email account. So very similar to an LLC.
Cool. All right. So that seems pretty basic, and I know that we wanted to just get to our key takeaways here, but the basic idea of this one was just what are some of the entities you should consider, right? And then and kind of how do you go about doing it? So let's take a look at our key takeaways today. Number one, LLCs and corporations, the advantages here, legal protection.
Yep, that's the biggest thing, legal protection. You want to protect yourself. You want to protect your personal assets. And you just want to keep it separate.
Cool. So keep it separate, and it helps protect, especially on this venture, which could be have some risk involved with it. Helps protect your stuff so that your family doesn't get hit with something that might go wrong.
100%, yeah.
Perfect. And then one of the key ones I know I took away was make sure you research that business name.
I would say so, because you don't want to get started with this and create Gmail accounts, cards, and then find out later that your name is not the one that is out there for you to take.
Yeah, that would be bad. It would be really a bummer to have to then now name your thing Junior or the Third or whatever.
Yeah, not good at all.
Yeah, no good. I don't like that. And then finally, you may be able to DIY a lot of this, but again, to reiterate, I know that you've told me this a bunch, James.
Yeah, go see your CPA and your attorney. Again, yeah, I work in the industry and I've done this for AOPA as well, personal. But I tell you, if you don't know where you're going, you can mess it up real quick.
Okay.
Right.
And you obviously want to avoid that and save yourself probably a whole lot of trouble, time, money. Just get it done right the first time.
That's right, because most people aren't in the business of setting up companies. They're in business for a specific purpose. So go after that professional help, CPA and attorney.
Cool. Great. Well, James, I want to thank you for being here with us today. I know that we're hoping to have you back again. We're going to talk about some other things in more detail in future episodes, more accounting 101 type fun, which I think will be cool. And I want to tell everybody out there, it's like if you would like us to cover a particular topic or you have any questions, feel free to contact us at FT Initiative. You'll see it there on the bottom, FT Initiative at AOPA.org. And I think that's how we're going to wrap it up here today. So thanks, James, for being here.
Hey, it was my pleasure. I enjoyed this very much.
Cool.
All right.
We'll see you next time.
Yep.